The committee will come to order. Good morning. I want to thank everyone for being here. A special thanks to our witnesses who have taken time away from undoubtedly their busy schedules to be with us. Well, it's here. The day that nobody looks forward to except maybe the IRS, Tax Day. I expect most of us have already filed our returns while struggling to figure out our liabilities and deductions and credits. We do this all the while trying to discern what exactly the terms adjusted basis and imputed interest mean, and sifting through a myriad of instructions or even the most basic of tax returns. Without question, the middle of April can be miserable for a lot of us. Taxpayers face a tax code that has become intensely complex and truly temporary, with tax relief being extended for 1 year, months at a time, or even retroactively sometimes. America's 28 million small business owners, taxpayers themselves, repeatedly complain that this uncertainty has made it difficult to plan and grow their companies. In fact, a recent survey by the National Small Business Association found that the sheer complexity of the tax code is actually a more significant problem for America's small businesses than their overall tax liability. Imagine that. Businesses are so fed up with not knowing what to do and how to do it that they care less about what they have to pay the IRS. Unfortunately, the current U.S. tax code has become one of, if not the most significant hurdles to the growth of existing businesses and creation of new firms. But it doesn't have to be that way. Over the past few years, there has been a renewed effort in Congress to reform our tax code to make it easier, fairer, and more stable. Here in our committee, we are working to identify the aspects of the code that are most troublesome to small business formation. We've already held hearings, met with trade associations, and most importantly, we've talked with our constituents back home. The message we hear is always the same. We've got to make it simpler and flatter and fairer. And taxpayers want Congress to enact changes in the code earlier in the year, or better yet, make certain beneficial tax provisions permanent so they can plan ahead. Unfortunately, Washington usually does things at the last minute or even makes changes sometimes retroactively. Another critical aspect of the tax reform debate is making sure we are not leaving Main Street behind. Some people may not realize that the vast majority of small businesses in the United States are organized as pass-through entities, meaning they pay no corporate income tax. Instead, business profits are passed through to the owner or owners to be reported and taxes paid on their individual returns. Our entire tax system needs revamped, not just half of it. There is no doubt that we must reform our corporate tax structure. We have the highest corporate income tax rates in the industrialized world. But as our committee has identified numerous times before, our small businesses are the backbone of our economy. They create 70% of the new jobs in this country and represent over 99% of all employers in the United States. Because so many of these enterprises file and pay their taxes on their individual return, we cannot and must not ignore them as we move forward with any tax reform debate. It's time for Washington to get serious about helping American families and small businesses. It's not just about helping them keep more of their hard-earned money, as important as that is, but about making April 15th not such a nightmare. Nobody likes to pay taxes, but the convoluted system we have now is simply too much of a burden. Reforming our tax code in its entirety will unleash the true potential of our economy. Our constituents deserve better than the mess Washington has given them. Again, I want to thank each of our witnesses for taking the time to be with us today, especially my constituent, Scott Lips, who's from Franklin, Ohio, which is in the 1st Congressional District, my district, and another Ohio, Dan McGregor, and we'll do further introductions in a couple of minutes, but I'd now like to yield to the ranking member, Ms. Velasquez, for her opening statement.
Thank you, Mr. Chairman. And I, too, want to thank all the members of the panel for being here, especially Dr. Totter, our witness. Spurred largely by Main Street growth, the American economy is as strong as it has been in years. However, our nation has also managed to outgrow many tax policies. For small firms, these outdated and increasingly complex provisions create an obstacle to success rather than a means of fostering expansion and job creation. This committee is well aware of the challenges created by the Internal Revenue Code and the major complications it has on business planning. Modernizing our code to reflect new business reality will assist in providing simplicity, fairness, and permanency to businesses of all sizes. The last major reform of the code took place in 1986, making an overhaul long overdue. But we cannot go forward without input from small business owners. These entities are a vital part of that equation, as they are responsible for most new job growth and business income. As such, they are a major part of our economy and an important aspect of today's discussion. But too often, their tax reform concerns are lost in broader debates. Today's hearing will allow us to start a dialogue between the small business community and policymakers regarding the best tax policy supporting the success of small firms. They are the drivers of the nation's economy, and we cannot afford to put the cost of collecting taxes on them, which is what a corporate-only approach will do. It is clear that small businesses can thrive and continue to improve our economy if we approach tax reform in a comprehensive manner rather than a piecemeal approach. Comprehensive reform will have immediate benefits for small businesses while also serving our nation's economic objective of promoting pro-growth policies. Focusing reforms efforts to a complete overhaul of the code ensures the small business community no longer has to worry about keeping up with constant tax changes. It also guarantees small business owners will not bear the cost of lowering corporate rates alone. Such an approach also reflects the goals of tax reform: simplicity, certainty, and fairness. I stand committed to working in a bipartisan way to revise policy that stifle entrepreneurship and innovation. A real opportunity exists to implement long-lasting reforms, and doing so will have immediate benefits for small businesses. With that, Mr. Chairman, I yield back.
Thank you very much. Gentlelady yields back. If committee members have opening statements, we'd ask that they submit them for the record. And I'll just briefly explain the 5-minute rule, which is you get 5 minutes. We'll give you a little bit of leeway there, but there's a lighting system. The yellow light will come on when you have a minute to wrap up, and the red light, we'd ask you to wrap up as close to that as possible. As I say, where there's a little flexibility. And I'd now like to introduce our panel. I'll begin with our first witness this morning. Our first witness will be Scott Lips, who is the owner of Sleep Tight Mattress Factory in Franklin, Ohio. He happens to be a constituent, as I mentioned before, in the 1st Congressional District. Scott started a business manufacturing institutional mattresses in 1989, and after 4 successful years, he and his wife Debbie and their 5 employees merged with Sleep Tight, a company that was founded in 1947, now producing both institutional and home bedding. Sleep Tight has grown to 18 total employees, and in addition to running Sleep Tight, Scott also served for 15 years on the Franklin City Council and 2 terms as the city's mayor. Scott, thank you for being here today. And our second witness will be Pete Sepp, who is president of the National Taxpayers Union. In this role, he leads the NTU's government affairs, public relations, and development activities. He also oversees the research and educational operations of the National Taxpayers Union Foundation. He has been with the NTU since 1988. He received his degree in history and political science from Webster University, and we thank you for your testimony here shortly. And our third witness is Dan McGregor, chairman of the board of McGregor Metalworking Companies in Springfield, Ohio, also a Buckeye. Dan started his career with Morgul Machine Tool, is that correct? Yeah. Machine Tool Company in 1968, the first of the McGregor Metalworking Companies. Dan worked with other family members and created 5 different business units focusing on 6 metalworking specialties. In June 2010, Dan retired as president of McGregor Metalworking Companies and now serves as chairman of the board. He graduated from Lehigh University in 1965 and served 3 years in the Navy, and we thank you for your service to our country. And thank you for being with us today, and I'll now yield to the ranking member to introduce our fourth witness.
Thank you, Mr. Chairman. It's my pleasure to introduce Dr. Eric Totter. He is an Institute Fellow at the Urban Institute and co-director of the Urban Brookings Tax Policy Center. Mr. Totter previously held a number of positions in tax policy offices in the U.S. government and overseas, including service as Deputy Assistant Secretary for Tax Analysis at the United States Treasury Department, Director of Research at the IRS, and Deputy Assistant Director for Tax Analysis at the Congressional Budget Office. He is the author and co-author of numerous papers on tax policy, tax administration, and retirement issues. Welcome to the committee.
Thank you very much. Gentlelady yields back. And we'll now go to our witnesses. And Mr. Lips, you're recognized for 5 minutes.
Good morning, Chairman Chabot, Ranking Member Velasquez, and members of the committee. I'm pleased to be here on behalf of the National Federation of Independent Business, NFIB. Our family-owned Sleep Tight Mattress Factory and Showroom and has been a member of NFIB since 1995. I also currently serve on the NFIB Ohio Leadership Council. Thank you for holding today's hearing, Tax Reform Ensuring that Main Street Isn't Left Behind. The current tax code negatively impacts small and closely held businesses in several important ways. So I appreciate the invitation to be here today to discuss these important issues from the perspective of a small business owner. The NFIB is the nation's leading small business advocacy organization. The typical NFIB member employs 8 to 10 employees with annual gross receipts of about $500,000. All of NFIB's members are independently owned, which is to say none are publicly traded corporations. Well, there is no one definition of a small business. The problems NFIB members confront relative to tax code are most representative of small businesses. A few consistent concerns are raised regardless of the trade or industry in which the small business is engaged. As part of representing small business owners, NFIB frequently conducts surveys of both NFIB members and small business population as a whole, and taxes consistently rank as one of their greatest concerns. In the most recent publication of the NFIB Research Foundation's Small Business Problems and Priorities, 5 of the 10 small business concerns are tax-related. In fact, the February 2015 Small Business and Economic Trends Report ranks taxes as the #1 problem small business owners currently face. Right now, taxes are a bigger problem than poor sales, the cost and quality of labor, and government regulation. I would like to spend the rest of my time telling you about my personal experience. Sleep Tight Mattress Factory and Showroom was founded in 1947 by Stan Rothman. In 1990, our family founded an institutional acute and long-term care bedding company, Home Care Mattress. In 1992, we merged Home Care and Sleep Tight. We started with 4 employees and now have 15 full-time employees. We are currently structured as a C corporation, but we started as a pass-through. While oftentimes a struggle, we are very proud to offer our team members health insurance, a 401k program, paid sick leave, paid vacation time, and more benefits. Aggressive tax rates and compliance efforts directed to fulfill intrusive relations severely impact our ability to offer this full-time benefits package that our employees need and deserve. We're proud of Sleep Tight Mattress Factory. We think you would be too. As I mentioned, we strive to offer our team members a positive work environment that offers a learning experience, the ability to make decisions, career opportunities, and full benefits. Beyond that, we believe community involvement is critical. Small businesses are the fabric of the community. For example, across America, you'll find small businesses sponsoring school plays, pee-wee football teams, cheerleading squads, and church youth group programs. The list goes on. The small business owner works in the community, lives in the community, and hires in the community. Sleep Tight Mattress has been recognized by our schools for involvement and won our Area Chamber of Commerce Business of the Year Award in 1999. That makes us feel good. What makes us feel even better is seeing our employees grow and build their lives and stay with our company for years. To serve our employees and community, we must have lower tax rates, fewer regulations, and a less confusing, less complex tax code. We have been in business in our community for over 24 years. I witnessed and experienced what punitive local, federal, and state laws were doing to the business community in Franklin. So in 1999, I did something about it. I ran for city council and won a seat. After encouraging a few fellow business owners and business people to run for council, I was honored to serve as mayor for 2 terms. We concentrated on fixing problems a bloated bureaucracy and out-of-touch government had levied on our small city. Our council addressed local incentive programs that unfairly assisted large corporations but did not offer incentives to small business. We instituted a downtown improvement program that offered grants and low-interest loans to small businesses locating or expanding within our community. We met with local zoning, planning, and building officials and redesigned zoning laws to assist businesses with the fewer and less restrictive regulations, for example, signed ordinances and requirements. Not every small business person can run for elected office. Instead, Congress should work to reform our tax code in order to help small businesses get back to doing what they should be doing, running their small business. Over 85% of NFIB members agree that Congress should fundamentally reform the tax code. As Congress considers tax reform, I would encourage you to keep these most important goals in mind. Achieving these goals will greatly enhance the ability of small and closely held businesses to thrive in the 21st century. 1, permanently keep the tax rates low. 2, do not create disparity between the tax corporate and individual rates. Reduce complexity and do not separate the business owner from the business. NFIB members are willing to make trade-offs necessary to lower taxes, such as reducing or eliminating deductions, credits, or exclusions. Should Congress enact comprehensive tax reform that achieves these goals, small business owners would no longer face one of their most consistent complaints: arbitrary and inconsistent tax preferences, constant change, and complexity in the current tax code. Small businesses truly are the engine of economic growth. This isn't just a slogan, as small business created 2/3 of the net jobs over the last decade. Small business owners are risk takers and entrepreneurs. They are the last businesses to lay off employees when business declines and slow to rehire when business picks up. The owners work additional hours until they can take it no more. When small businesses hire an employee, it's their intent to keep them for the long run. The current tax code has become a confusing and unpredictable challenge for the vast majority of small business owners. Our tax laws should not deter or hinder the ability of small business owners to create or expand their business. Taxes are a major issue for all small business owners. Tax law can dictate the business decisions an owner must make, whether it's the type of structure to adopt, to make an investment in programs or machinery, to expand the facility, or to hire employees. After decades of patchwork changes, Congress needs to make major adjustments to our tax laws to reduce the complexity and confusion of business growth. I appreciate Congress taking a serious look at reforming the tax code and urge you to keep in mind the unique challenges that face small business. Thank you for having me here today, and I'll be happy to answer any questions.
Thank you very much. Mr. Sepp, you're recognized for 5 minutes.
Mr. Chairman, Madam Ranking Member, members of the committee, National Taxpayers Union is honored to have been invited to this hearing, and I could discuss at length very technical changes to the tax laws itself, to go on and on about rates and bases and JCT scores and econometric analyses, but I want to focus my brief remarks here on one issue: administrability. To us, with the tax laws as they affect small businesses, administrability means reducing complexity in the system that businesses encounter every day. It also means increasing the access to justice that businesses have should they find themselves in a dispute with the IRS. One interesting statistic about the complexity costs that small businesses face, I give a number of them in my testimony, but the National Association of Manufacturers determined that for businesses with fewer than 50 employees, the burden per worker of tax compliance alone is more than 50% higher than all other businesses. It's a regressive burden, and it is a costly burden. What we want to do here is try to identify the areas of the tax code that are the most complex for small businesses and legislate in those areas accordingly. There are some instructive studies here that I think could help us. One that was taken by the IRS Statistics of Income Division, measuring the tax compliance burden of small business, identified areas of business activity and tax return activity where businesses encountered unduly harsh burdens of time or money. Those were things like using the accrual counting method, having foreign operations, filing returns in multiple states, keeping records for alternative minimum tax liabilities, completing an end-of-year inventory to comply with various tax requirements. These are areas where Congress needs to focus its attention in simplifying the law. How do we do that? Well, I think that, for one, foreign operations of businesses need to be scrutinized with an eye toward reducing the number of forms and instructions. The Taxpayer Advocate's Office has this astounding statistic that there are, for U.S. businesses conducting economic activity abroad, 43 publications with 1,212 pages referring to other publications with over 13,000 additional pages, 1,500 pages of forms. No small business can possibly shoulder a burden like that without the owner just throwing up his hands and saying, why bother to expand abroad? And yet that's precisely what we want small businesses to do, conduct more activity abroad. I'll confine the remainder of my remarks to a very important and overlooked topic, and that's taxpayer rights in the appeals processes and the special problems that small businesses encounter. We heard hearing after hearing back in the 1980s and 1990s from businesses that were literally shut down just by the audit procedure itself. They simply could not conduct their operations while the IRS was going through their records. We enacted laws, especially a very comprehensive one in 1998, to try to improve the appeals process, give businesses more opportunities to remain self-supporting during the examination and the appeals and collection process. We need to make modifications to those laws now. There is a set of proposals introduced on the Senate side by Senator Cornyn called the Small Business Taxpayer Bill of Rights. This has some improvements to the current laws, such as introducing alternative dispute resolution to the process for appealing audits. This would be a fantastic tool. It would be lower cost, it would be a quicker resolution, and it would help to address some of the problems that the taxpayer advocate herself has identified in the examination process. She is saying, for example, that examiners, revenue officers, are not being given the latitude to make offers in compromise and approve them with businesses in audit situations quickly enough. The businesses end up suffering, the collection activities go on, and ironically, the government hurts itself because these businesses are basically dissolved under tax problems and they're no longer contributing to the Treasury. That serves no one's interest. In short, ensuring that Main Street doesn't get left behind means ensuring that the tax system doesn't crush the entrepreneurial spirit. And that entrepreneurial spirit is not something you find when a small business owner confronts the rates and bases and minutia of the tax system. It's what they confront when they face hours upon hours, thousands upon thousands of dollars trying to fill out tax returns, and the very real fear that if the IRS questions an item on that return, they might as well pay up rather than fight it, even if they think they're right, because the expense to them personally and to their business is just too great. We have to change that situation. We came together in a bipartisan fashion, not only in 1986, but in 1998 with the IRS Restructuring and Reform Act. Let's do it again. NTU and its members are ready to assist in that task. Thank you.
Thank you very much, Mr. Sepp. Mr. McGregor, you're recognized for 5 minutes.
Chairman Chabot, Ranking Member, and other members of the committee, thank you for the opportunity to testify here today. I recognized my timeliness when my cab driver asked me this morning if I'd paid my taxes, and he went on to complain about his taxes.
The ranking member asked me the same thing when I got up here. So.
This year is the 50th
And I did, by the way.
This year is the 50th anniversary of McGregor Metalworking. Back in 1965, my family purchased a small 8-man tool and die shop. Today, we employ 375 workers in 4 locations in Springfield, Ohio, and 1 in Aiken, South Carolina. These are good-paying manufacturing jobs in areas that need them. Our business is contract metal forming, and our major customers are in transportation, auto, lawn and garden, and agriculture. In support of my written testimony, I would like to accentuate the following important points.
First, pass-through status is essential for a family-owned business. In 1986, we changed from C Corp to S Corp. This change fit our desire to grow our business and still be able to reward our shareholders. Last week, we had our semi-annual family shareholder meeting where we reviewed the results of 2014 and our plan for 2015. This is important so that the shareholders understand the impact of their pass-through earnings on their tax filing, recognizing that when the earnings are reported, they have to pay their taxes and pay estimates the following year. Second, lower taxes mean higher retained earnings, allowing the company to grow. After the big recession of 2008 and 2009, we were faced with two bank covenants, a requirement tying debt service to free cash flow and a cap on our total debt to equity. Taxes play an important role here since our ability to retain earnings is limited by how much tax we pay. Prior to 2013, we paid about 34 cents of every dollar to cover shareholder taxes. Today, we pay about 42 cents. This is a huge increase, and it limits both our ability to borrow and our ability to increase employment. In my business, $30,000 in retained earnings can mean the addition of a new job. Third, the R&E tax credit. Because our business is technical in nature, we rely on the R&E tax credit to develop new processes. Some of our shareholders are unable to use this credit because of the alternative minimum tax. Changing that rule to allow taxpayers under the AMT to get the R&E tax credit would fix that. The total elimination of AMT would be even better. Fourth, the estate tax. The 2012 increase in the estate tax exemption to $5 million was a positive step for closely held businesses. But any family that grows their business beyond this exemption must constantly make this part of their business strategy. Often, this is contrary to the best interests of the business and the family members. Transition of ownership in privately held businesses is never easy, and the estate tax is often the death knell of family business continuance. And finally, tax reform. Our family business started 50 years ago and has become a significant employer in our community of 65,000 people. The population of Springfield is gradually declining and needs jobs to help retain citizens. Tax reforms that incentivize business growth and retention are essential to our community. So I will close with three recommendations for tax reform going forward. A, it should be comprehensive and improve the tax treatment of pass-through businesses and corporations alike. B, parity should be restored for the top rates paid by pass-through entities and corporations. And C, it should reduce or eliminate the double tax paid by C corporations. Reform that follows these principles would help McGregor Metalworking and other employers in our area continue to succeed and create jobs. Thank you, Mr. Chairman and Ranking Member, for this opportunity to testify. I look forward to answering any questions.
Thank you very much. Ms. Toder, you're recognized for 5 minutes. Dr.
Thank you very much. Chairman Chabot, Ranking Member Velasquez, and members of the committee, thank you for inviting me to appear today to discuss the effects of tax reform on small business. The views I am expressing are my own and should not be attributed to the Tax Policy Center or to the Urban Institute, its board, or its funders. There is a growing consensus that our current system of taxing business income needs reform and bipartisan agreement on some main directions of reform, though not the details. The main drivers for reform are concerns with a corporate tax system that discourages investment in the United States, encourages U.S. companies to retain profits overseas, and places some U.S.-based companies at a competitive disadvantage. At the same time, the corporate tax raises relatively little revenue compared to other countries, misallocates scarce capital by providing selected preferences to favored assets and industries, and allows some U.S. multinationals to pay very low tax rates by shifting reported profits to low-tax countries. No one is happy with this state of affairs. President Obama's framework for corporate reform shares important features with the tax reform proposal introduced last year by former Ways and Means Chairman Dave Camp. Both would reduce the corporate tax rate, pay for the lower rate by cutting back major business tax preferences, and reform international tax rules. Corporate tax reform, however, cannot proceed in isolation from the individual income tax system. The base broadening needed to pay for a lower corporate rate would affect all businesses, including pass-through entities that pay no corporate income tax, but instead report income to their owners who pay individual income tax. A reform that pays for a corporate tax rate cut by reducing business tax breaks will raise taxes on these business owners. Businesses affected include partnerships, subchapter S corporations, and sole proprietorships. Many of these are small businesses. Tax reform proposals, therefore, must address the concerns of small business owners. A large and growing number of U.S. businesses are organized as pass-through entities. In 2011, 95% of U.S. businesses were either sole props or pass-throughs and received 38% of business receipts. Most partnerships and S corps are small businesses, but 95% of their net income and business receipts comes from large and mid-sized businesses with assets greater than $10 million. Pass-throughs are taxed more favorably than taxable corporations because they face only a single level of tax, while profits in taxable corporations face both the corporate tax and the individual tax when companies pay dividends or shareholders receive capital gains. A lower corporate rate would create a more level playing field between corporations and pass-throughs. Less than 4% of individual taxpayers who receive most of their income from business are in the two highest tax brackets. But these taxpayers receive 65% of business income, but much of this does not come from small businesses. A broader tax reform that reduced marginal tax rates and eliminated tax preferences, which I might prefer for both individuals and corporations, need not raise taxes on pass-throughs. But to maintain revenue and distributional neutrality, such a reform would have to cut back on popular tax preferences such as the deductions for home mortgage interest, charitable deductions, and state and local taxes, and the exemption of health insurance premiums from tax. Even then, as in the Camp proposal, an additional surtax at the highest incomes might be required to meet the revenue and distributional targets. Congress could shield most businesses from the adverse effects of business-only tax reform through targeted relief. This might include extending and expanding the higher Section 179 expensing limits that expired at the end of 2014, or increasing the width of the 15% corporate rate bracket. A special tax rate for pass-through income, however, would create unequal treatment between high-income individuals with business income and those with labor compensation, and would create market distortions as businesses seek ways to compensate highly paid employees as independent contractors and engage in other transactions to recharacterize income. In conclusion, the corporate tax reforms now under discussion raise concerns about the treatment of pass-throughs, many of which are small businesses. These concerns are best addressed through targeted relief for truly small businesses instead of general tax rate cuts for income from pass-throughs. And I would point out some of these forms of relief, like expensing, would also be a major simplification. Thank you.
Thank you very much, Dr. Toder, and I'd like to thank all the panel for their excellent testimony here this morning. And now the members of the committee will have 5 minutes to ask you questions, and I'll begin with myself, recognized for 5 minutes. Scott, let me begin with you. You mentioned the NFIB's recent Small Business Problems and Priorities survey, and that 5 out of the top 10 concerns in that survey relate to taxes. Could you talk a little bit about where taxes fall on your list as a business owner and how that has changed over the past 25 years that you've been in business?
Well, the most important part to us is we are only 15 employees. We do not have a compliance officer to assist with taxes. So just keeping up with the code and investing, we have to hire outside help. So that's an expense to the corporation that the tax burden is creating. So a less confusing regulation would allow us to continue to offer more benefits, for example. I mean, I was very proud to tell you we offer a full range of benefits. We even have a paid health care for our employees. We have paid sick time, paid vacation. But our 401k, something had to give, and jobs are so important to us that we no longer can match. So, example, if we weren't paying or fighting an aggressive tax code or a confusing tax code, I think we would be able to do things like restore our match to the 401k.
Thank you very much. Mr. Stepp, I'll go to you next. At a hearing that we conducted last month, we focused a lot on the fact that for the last 6 years, the number of business deaths or businesses going out of existence, small businesses, has outpaced the number of business births. And apparently that's the first time in American history, according to what we were told. This is a very troubling statistic. Do you feel that the problems with our tax code could be a factor in the fact that we do see businesses going out of existence more, that, dying than rising?
Oh, I definitely think so. In the metaphysical sense, we have businesses thinking about the burdens of complexity, not only at the federal level, but even at the state level in complying with taxes. That's not really something that Congress can deal with, but it is a consideration in every business owner's everyday operations. But even in the more practical, narrow sense, there may be an issue with the IRS's own collection procedures here, in that the taxpayer advocate has noted several times that all too many cases involving small business tax debts are being thrown into the automated collection system rather than being kept at levels where there might be an efficient resolution to the problem to keep the business self-supporting. So again, we sort of have a bifurcated problem here, one that's systemic in terms of how the tax laws are written, and one that's operational in terms of how the IRS is approaching resolutions with businesses.
Thank you. Let me turn to you next, Mr. McGregor. You also mentioned the death tax in your written testimony, federal inheritance tax. We call it the death tax around here now. This week, we're voting once again on the floor on legislation to eliminate it. Your family has had businesses for several generations now. Could you talk a little bit about how the death tax impacts a small business plans that you make, and how many employees that you can hire, and what you have to go through in planning for that?
I think the real issue is the extenuation of the business down into the next generation. And in our particular case, we gave stock to the next generation, and which may or may not be a great idea. It's worked out well for us, but we've continually worked around this issue and tried to prepare to be able to move it forward. So it's really more of a cost of planning and making a mistake that damages the business.
And we've been told for years that the two entities that are most directly affected by the death tax are small businesses because of the difficulty in passing to the next generations, and family farms are the two that it affects most directly. I'm almost out of time, so in the time that I have left here, let me just ask a question. We have talked about, I think it's a bridge too far now, but we've talked about going to either a flat tax or a flatter tax, or to a national sales tax and getting rid of the IRS and getting rid of income taxes altogether. And I'd just like to see a show of hands, because I don't have a lot of time. Can I see how many of you think that we ought to go to a flatter or a flat tax? Just a show of hands. Let's see, 3 out of 4. And how about if we could get rid of income tax and IRS altogether and go to a sales tax? Can I see how many would be supportive of that? Okay. So I'm seeing two of the 4 there. Okay, it's interesting. I appreciate that very much. And I'll now yield to the ranking member, Nydia Velazquez.
Thank you, Mr. Chairman. Mr. Totter, the last time broad-based tax reform took place, one of the driving principles was tax neutrality. Today, as we move forward on tax reform, there is also a concern with the long-term budget. What principles should be included in our effort to overhaul the code while also minding current fiscal realities?
Okay, that's a very, very good question. I think we certainly could. Thank you. We certainly could have a revenue-neutral tax reform that would not address the long-term budget efforts. I think it's difficult. The problem with doing that is a true tax reform would cause so many special interests to be hurt, and so many people would object to it, that it's a very hard political lift to do without also making some contribution to the long-term budget effort. So that's my reservation, but I think that would be a positive step to do revenue-neutral tax reform. With regard to the long-term budget, you really have to address the issue of entitlements and the growth of entitlements and do something on the spending side. So I don't think, I think that the revenue, probably that would fall short and we would need more revenue as well. But those two things really need to be handled simultaneously.
Thank you. The administration stated that its intention to lower corporate rates from 35 to 28 and 25 for manufacturers. The tax code already has specific provisions for certain industries and sizes of businesses, so this idea is nothing new. However, should we be moving away from picking winners and losers as we move forward to reform the tax code? Is having special tax treatment inevitable to ensuring Main Street businesses can compete on a level playing field as their larger counterparts? Where do we draw the line?
Well, I think my view is we should have as little special tax treatment as possible, and we'd be much better off with a lower tax rates for all forms of businesses rather than trying to have the government pick winners and losers. I don't think the government's very good at that. I mean, there might be some people talk about the research credit, and so there might be some argument for keeping that, but I'm not even necessarily persuaded of that. And there might be some proposals such as small business expensing, which are aimed at the very high compliance costs that small businesses face relative to their level of revenue or profits. And so I think easing those compliance costs does require some special provisions.
Okay.
But generally, the answer, yes, on the level playing field.
Thank you. Mr. Lips, one of the goals of tax policy is providing business owners with certainty when it comes to taxes. Adding to this uncertainty is the ongoing debate on tax reform. What effect does this have on your business success?
I think it would allow us to become more of the fabric of the community. Any dollars that we have, we use to sustain the corporation and improve our benefits package. We support our local school system. We give our employees, as I mentioned earlier, a 401k match back. So I feel like a small business owner has a responsibility to be part of the fabric of their community. Tax assistance, of course, will help us with that.
If we don't take affirmative action on comprehensive tax reform, what effect will that have in terms of you being able to hire, to plan, to make business investment?
It will limit our ability, and we may have to look at other options like reducing how much we contribute toward our company health policy. It will help some small businesses in the sense that we have to pay a local tax preparer. So fees are going to go up as it becomes more confusing. So the local tax person is probably going to say, Scott, send a check.
Thank you. I would like to ask this question to each of the panel. Many members on this committee have been adamant that comprehensive tax reform legislation get passed this year. I think quick action could send an important message to the business community. Yet there is widespread pessimism that anything will evolve anytime soon because some difficult compromises must be made. If we could accomplish only corporate tax reform and not individual, is this something the small business community could accept? I heard almost all of you saying comprehensive tax reform. Or would you rather see nothing get done until a complete overhaul can be completed?
And the gentlelady's time's expired, but you can all answer the questions.
Yes, Mr. McGregor.
I'd rather hold out. I'd like to see comprehensive.
Thank you.
30% of my competitors are C corporations, and I'd be at a big disadvantage.
Yes. Mr. Sack.
Well, the last thing we want to see is some kind of C Corp reform effort that severely disadvantages pass-through entities. We might be able to create some kind of safe harbor for pass-throughs while the C Corp reform is going on. I also think there are other reforms that can be made incrementally to benefit both small businesses and large ones that would lead toward comprehensive reform in the next Congress. I recount some of them in the testimony.
Yes. But my question was, if all we can do is corporate tax reform, would you be supportive?
Not comprehensive enough.
Mr. Lips.
We're a C. We were an S, a pass-through, and we're a C now. So removing the individual story, I would say I fear removing the business owner and the small business and causing separation there.
Thank you. Mr. Toder.
Well, I can't speak for the small business community, but I can say that our international and corporate rate structure relative to the rest of the world is so problematic these days that I think we have to address those issues. And in doing so, we will inevitably affect other businesses, and we'll have to take some measures to deal with that.
Thank you. Thank you, Mr. Chairman.
Thank you. The gentlelady's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank all of you for being here today. Appreciate your testimony. I want to start out with a situation. I know that the tax extenders that we passed at the end of last year, we waited until the 11th hour to do that, and it's kind of interesting. I had one of my constituents who sells a lot of equipment to rock quarries and people who are in that business, and he sold 5 particular pieces of equipment all the rest of the year. But when we passed the tax extenders at the end of the year with the accelerated depreciation in it, suddenly he sold 6 more pieces of equipment in the last 2 months of the year. What tax extenders are important to you? The first part of the question. And the second part of the question is, with complex tax reform or comprehensive tax reform, would you be willing to give all that up if we can go back to a flatter tax? Mr. Lips, we'll start with you.
We use Section 179 small business expenses.
Right.
I think that's a tax extender.
Right.
We also have the bonus depreciation program we use, so that's important to us. Obviously, it's Section 199. I think that tax extenders are critical today because of the current tax code we're living under. However, if you flatten that tax code out or do a comprehensive reform that addresses all of our measures, I believe that small businesses are very willing to give that up.
Great. Mr. Sepp, what do you see?
Well, Section 179 is obviously very important for small businesses. It takes us in the direction of full expensing, which should be the ultimate goal of tax reform for all businesses. That's probably a long way off, very difficult to achieve. But among other extenders, there are only perhaps a handful. The R&E is one that comes to mind that would be worth preserving in many situations. Here again, though, taking them all and trading them for rate reduction in a simplified system might be worthwhile. Your colleague, Congressman Pompeo, had an excellent bill in the last Congress to take about a dozen very narrowly drawn energy credits and direct the Secretary, after their repeal, to put that into rate reduction. That's an incremental approach we might want to take.
Perfect. Mr. McGregor?
We do use the R&E tax credit, and it takes a lot of effort to create that data. So it's nice to know in advance that it's going to happen, because to do it for a year and not get it. As far as trade-offs, that's an expectation, I'm not a huge bonus depreciation person. We are heavy investment, and it can pay off beautifully. And if we have it, it's wonderful, but, so that would be on the table.
Perfect. Thank you. Mr. Lips, you're representing NFIB today, and quick question for you here with regards to, the chairman made reference a while ago to the fact that we've lost more businesses in the last several years than we've actually created. And so I was wondering if you have an idea of how many businesses were lost due to the complexity of the tax code, or how many were not started. Is there some sort of information out there on that? That's a pretty nebulous question there, but I'm just curious if you've seen some trends, perhaps, that you could tell me that were based on the tax code.
I'm usually spending my time trying to run my small company and understand the tax code. So NFIB studies the numbers, but I would certainly tell you a personal situation. I have a daughter who actually asked to sit down in our company and say, how do I resign when my dad's the president? She wanted to start her own company, and we found it so much more difficult than just 25 years ago. It was so complex for her that we had trouble even helping her do that, and we were so proud she wanted to be an entrepreneur. But it's a very difficult and daunting situation when you first analyze it.
I think that's one of the problems that we have, is that there are so many disincentives now to starting small business, and the statistics bear it out. when you look at the number of businesses that are not being started compared to ones who are losing, it should send up some alarms here. Just very quickly, Mr. Sepp, you made a comment a while ago with regards to expanding business being able to expand abroad and to use tax incentives to do that. Do you have some ideas?
Well, I think that making the switch to a territorial tax system versus the worldwide one we have would be a step in the right direction. That's a very comprehensive.
Do you think if you went to like a flat tax, that would be a way to, would that be helpful or would that be hurtful?
That would be helpful, in my opinion. There are lots of other smaller steps we have to take, but most importantly, even if we are to live under the current system, we have got to simplify the structure of forms and reporting for smaller businesses that have activities abroad. One way we might want to do that is through a quadrennial simplification process. That was something that was brought up when we were debating the IRS Restructuring and Reform Act back in 1998. You bring in a bunch of volunteers from the public and private sector to go through the code and the regulations, make a list of recommendations, have an up or down vote on them. Right. That would be a way to resolve some of this.
Well, it would certainly be great if we could simplify the tax code, because I know that 15, 20 years ago I did my business's taxes and it was like 8 or 10 pages, and now my taxes, I can't do them any longer, and they are at least an inch and a half thick. So we need to do something.
Incredible.
Thank you very much for your testimony.
The gentleman from Massachusetts, Mr. Moulton, is recognized for 5 minutes.
Thank you, Mr. Chairman. Gentlemen, there's broad consensus on this panel and certainly in the room that we need to have comprehensive tax reform. And I just want to get at that a little bit more. Mr. Lips, from your position, not just as a small business owner, but also from your position at NFIB, from your perspective, what is holding us back in being able to tackle this issue? And you can answer that both in terms of what your view of the problems in Congress is, but also why is there not more pressure from the small business community to really get this done?
I think the small business community is so committed to its job, to daily making payroll, that we're not protesters. We don't have time. So we do at local town halls when Congressman Chabot appears in Franklin. Believe me, we ask him to help us with this issue. But I really think it's a time factor. If we take time away from our company, who's going to do the job while we're out trying to fight for tax reform? So sometimes our voices may be muffled.
That's a good question. Is there anyone else who would like to comment on that? Dr. Toder, do you have any thoughts in particular?
Well, the tax system is very the tax system is very complicated, and changing it is also very complicated. There are many moving parts, and there are many people who will be affected, some of whom will be affected adversely. You get lower rates down by eliminating benefits for some groups of taxpayers. They're not just small loopholes. They're things like home mortgage interest and charitable contributions. And without saying that necessarily that's a bad thing to trade off lower rates for eliminating benefits, it's not easy to do. And I testified at a hearing on the home mortgage interest and suggested ways which I thought it could beneficially be cut back. And I was not surprised at the total lack of interest from members of the Ways and Means Committee in those ideas. So it's difficult.
Mr. Sepp.
I would say there's a problem of follow-through at the granular level of small business input about the tax system. The taxpayer advocacy panels, for example, that are meeting around the United States take all kinds of suggestions from small business owners about everything, how to improve the look of forms, the ease of compliance, and the like. Some of those are adopted by the IRS. Others are cast by the wayside. Same thing happens with the Taxpayer Advocates report to Congress. If you look through the report cards that follow subsequent to each one of those, there are just a whole list of recommendations the advocate made, and the IRS's responses. More often than not, the IRS refuses to implement them. One thing that might be helpful would be for Congress to put policy riders, frankly, in appropriations bills instructing the IRS to pay more attention to these recommendations and try to implement them.
Would you yield for a second?
Yes.
You don't think that budget has any implication in terms of the lack of staff at the IRS?
I think budget does have somewhat of an implication, though I would point out that between 2005 and the present, if you take a look at the three major categories of the IRS budget, taxpayer service has been declining at the expense of enforcement and administrative costs. So that's a
Thank you.
priority problem,
Thank the
too.
gentleman for yielding.
No, thank you.
Can
So,
I just say a word?
Mr. McGregor, yes, sir.
The big C corporations are squealing loudly because of global competitiveness, and you're hearing them. We are starting to squeal because we don't want to be left behind. So that's my answer for you.
So there's broad consensus among many people on the principle of a simpler tax code where we are able to reduce overall rates in exchange for eliminating loopholes. The problem, Dr. Toder, as you referred to, is that everybody has at least 3 or 4 loopholes that he or she wants to hang on to. From the small business perspective, what are the carve-outs that are most important? If you were to just pick 2 that you think are most important to preserve in a reform that would eliminate many of the loopholes overall. Mr. Sepp?
I'd say the provisions regarding expensing, because they take us as close as we can to the full expensing ideal that we want in a tax system.
Mr. Lips?
I would say for our situation, the 179 has been most beneficial, and I would certainly look at the death tax because I have so many family farms in my area that it's a bigger problem for the family farm than small businesses because you've got the $5 million carve-out right now.
Mr. McGregor?
You're asking what do we not want to give up?
Exactly.
And I would say state and local taxes as a deduction.
Great. Dr. Toder?
Well, I'm not sure I'm
That's right. My time is
I'm not
expired.
giving anything up, I guess.
Fair enough. Mr. Chairman, thank you.
I have my benefits, but they're not business benefits. So.
The gentleman's time has expired. Thank you. The gentleman from New York, Mr. Gibson, is recognized for 5 minutes.
Well, thanks, Mr. Chairman. I appreciate the panelists' informative hearing. I appreciate your testimony. Mr. Sepp, a couple of data-related questions. First one, and if you can, if possible, I'd be interested in your report and analysis in terms of 1987 to 2015, if that's available. First question is compliance costs as a percentage of business, any data you have on that, and sort of looking at it from 87 to 2015.
Well, there have been attempts to quantify the costs of the federal tax system going back something on the order of 70 years. And depending on what you count in the estimates, the burdens have been figured at anywhere between 1% and over 11% of actual tax collections. And there was one conducted back in 1993 by Professor James Payne, who suggested that for every additional dollar of tax raised on the federal level, there was a 65-cent deadweight loss. Now, my review, and I'm certainly not in academia, but my brief review of the literature says that's the edge of the envelope as far as costs go.
And is there any sense in terms of what the opportunity costs? Have you seen any follow-on studies there? In other words, it comes disproportionately at capital investment, or it comes disproportionately at wages and benefits. Is there any sense on what the opportunity costs are?
It tends to come proportionally on new investment. That is what a lot of the literature says, not all of it, certainly. There's also this problem we have, I think, in identifying precisely that point, the opportunity cost. Payne attempted to do that, which is why his estimate is so high. We have a difficulty trying to figure out how do you quantify something that's never really happened. And I think that given the fact the last study I was able to find of small business tax burdens was 2011 for the SBA Office of the Advocate, this is something Congress might want to explore, is having some kind of symposium between SBA, private sector professionals and the like, and really drill down on this question of opportunity cost.
Thank you. And then the second data-related question, it may not have empirics on it, but maybe intuition or speculation anyways, and it has to do with '87 to 2015 IRS approach in terms of education and compliance. Have you noted any significant changes there in terms of approach, whether or not they're spending sufficient time helping small businesses who may be maybe not knowingly complying versus coming in and, penalizing them?
I think it's a matter of peaks and valleys. In the late 1980s, you had Congress engaged in activity like Taxpayer Bill of Rights 1. In 96, you had the second TBR. In 98, IRS Restructuring and Reform Act. And the 98 Act is what really put the emphasis on reorganizing the agency, retraining employees toward customer service, and thinking more about the ability of allowing businesses to remain self-supporting while they were going through collection due process. The taxpayer advocate, though, has noted that increasingly they're relying on the automated collection system to handle a lot of these things. And I think we probably hit a peak on the emphasis on proactive service in resolving these problems somewhere in 2005, 2007. It's been downhill since.
And do you think that as we proceed as a committee, it may be worthwhile for us to sort of recapture that essence of trying to be helpful going?
Absolutely.
Yeah. And then finally, just from the panel, given the 1986 reform, a lesson learned, something that you think we should, certainly a lot of people think it was a good reform, but what should we try to stay away from? One each.
All right, I'll start. I think it was a good reform, but in terms of meeting certain targets, they did things that they shouldn't have done, like the individual alternative minimum tax in its current form is really a product of 1986 reform and trying to get a few more dollars to hit targets. So I think you've got to be careful that you don't put time bombs into the system.
That's good.
I would say that there may have done a few things wrong, but that would be the target going forward.
I'd have to agree with Dr. Toder about AMT. That was a major mistake. Also, in the current draft, well, the draft from the last Congress, some of the methods, such as repealing LIFO accounting, might have been a step too far and deserve reexamination.
In 1986, we weren't in business yet. We had a dream of being in small business, so I'm going to yield to my esteemed colleagues.
Yeah. Thank you. This is very helpful. Thanks, Mr. Chairman.
Thank you very much. Gentleman's time's expired. Ms. Meng, the gentlelady from New York, is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Ranking Member. Thank you to the witnesses for being here today. I believe that certainty and clarity are necessary to improve the tax code for small businesses, and complications stem from the various temporary, unstandardized deductions and credits. However, many of these credits do serve a valuable purpose in incentivizing financial activities useful for the public, such as student loans, first-time home buyers, R&D investment, charity, and so forth. Do you have any ideas that simplify the tax code while still maintaining a system of positive incentives for small businesses? And anyone can answer.
All right, I'll make a comment on that. I think it would be very desirable for the Congress to re-examine these proposals once and for all that you call extenders, decide which ones you want to keep and which ones you want to get rid of, so we don't have this uncertainty in this process every single year, which creates difficulty for taxpayers, difficulty for the IRS, difficulties for the tax system. I mean, there are probably some of those benefits that you want to make permanent, but there are many that will be better off without.
On another note, our current tax code is not a progressive tax system because there are many with greater ability to pay don't always pay a higher rate. Is there more room in our tax code, and if you have any ideas, to reflect the progressive personal income tax structure?
All right, well, I'll comment on that too. I think we actually do have a very progressive personal income tax structure, and to the extent that that doesn't apply to everybody, and there are some very high income people who are not paying a large share of tax because of certain tax benefits. I think the solution to that is to remove those tax benefits and try to lower rates in compensation, as we did in 1986. But you may want the system to be more progressive, but I think it is progressive.
I would just add the concern that while we think a lot about longitudinal fairness in the tax system, looking up and down the income scale, we need to keep looking sideways on the income scale, making sure that people with roughly the same amount of income or profit pay roughly the same amount of tax. And the answer in this system is nowhere close. There was actually a study by Quantria Strategies for Small Business Administration, which took a look at compliance burdens by industry for sole proprietorships, and the fluctuations were wild depending on business models and activities. Some, like mining, agriculture, transportation, and warehousing, they had complexity burdens in terms of hours spent and money spent that were 500% or more higher. It's gigantic differences.
Thank you. I yield back.
Thank you. The gentlelady yields back. The gentleman from California, Mr. Knight, is recognized for 5 minutes.
Thank you, Mr. Chairman. I'll just make a couple comments before a question. Coming from California, our biggest concern from small business is not so much the whole complexity of everything, but how much we change. Changing the rules every year seems to be the #1 concern of small business. I can't do a 5-year plan or a 10-year plan if you're going to change it 5 or 10 times on me. And I can't invest a certain amount of money if you're going to change the rules in the next few years on me. So let me ask just a broad question about that, about the Federal Government. How much does certainty help the small business, especially when it comes to taxes and regulations, as we move forward? And how much has that been changed since the reforms in the late 1990s?
I think it is the most critical part of us deciding to invest in new facilities, infrastructure, or machinery. If we know what we're facing, and we face it on time, sometimes the extenders are a little late, if we know what's ahead of us, we know how much risk can be taken to protect the jobs that we currently have.
Last month, there was an interesting study conducted by Institute for Policy Innovation where they reviewed reports from Federal Reserve Bank of Kansas City and employment reports from the media, and they determined that the retroactive extension of Section 179 expensing was so sudden and created a level of certainty after so much uncertainty that it did not have its intended effect of helping investment. There was not a measurable rise, as expected at least, in things like agricultural equipment investments. It came too little too late.
I think the example we heard about bonus depreciation clearly affects major purchases of capital equipment, and it can be very damaging.
Well, I would like to actually commend the Congress. You've made great progress since a few years ago when you had all the Bush tax cuts being expired or extended, and at least you've settled on big parts of the tax code. You have these remaining expiring provisions, and I would agree bonus depreciation is very important. Having an investment incentive that you give after the year is over doesn't really do very much for investment. So either keep it or get rid of it or modify it.
And I think several of the members have hit on a couple of the items that make it very important for us. If we talk about an overhaul, I'm an optimist, and I would like to see that, but I'm also a realist, that there are tens of thousands of people employed by the government, and there are close to 1 million people employed that do taxes, that do preparation, that do attorney work on taxes. And it's very difficult to do an overhaul when you're talking about close to a couple million jobs across the country. So I would ask that you have a little bit of an open mind, too, when we're talking about little pieces that we can do that will help small business, especially and we can get them through, especially in Congress where we don't agree all the time. And getting something that's bipartisan, that moves forward, that gets signed by the President is very important, especially when we're talking about the entrepreneurs that are hiring people, that are expanding, that are helping our economy like no one else can. So those are the comments that me as a freshman would like to move forward with, and especially the optimism of getting something done in my first session. So I yield back the balance of my time. Thank you, Mr. Chair.
Thank you. The gentleman yields back. The gentleman from Nevada, Mr. Hardy, who is chairman of the Subcommittee on Investigations, Oversight, and Regulations, is recognized for 5 minutes.
Thank you, Mr. Chairman. You know, as a small business owner myself in the past, is it working? The opportunity to employ is a great thing, and as a business, you want to have to pay taxes because it means you're going the right direction, not the other. Tax deductions or tax losses is not a good thing. But through that process, Mr. Sepp, you talked about manufacturers costing them, large manufacturers costing them somewhere around $960,000 a year to prepare for those taxes. And I know that you're correct when you talk about 1.5 to or bigger for smaller businesses, employees under 50, that it costs us more. Can you give me an idea why that is? I know why, but I'd like to have you explain that.
Well, just that there are certain inescapable base costs to tax compliance that no business can really avoid, has to deal with. Filing, if we're talking about C Corps, well, we have a variety of schedules and whatnot that have to be filed, but the basic 1120 return takes a lot of time and effort. If you're looking at Schedule C filers of any size, the Schedule C might become more complicated the larger the business is, and especially if it does business abroad. But even if there is no activity abroad, the filing of the Schedule C has a base cost in time and money that really cannot be avoided. The National Society of Accountants publishes a whole list of those costs by form. Also, of course, if you're distributing the costs over your employees, obviously fewer employees, greater costs per employee. That's going to run the math up as well.
I'd like to also now go back to Mr. Knight's discussion. I think he's right on point that business has a challenge with knowing what the Federal Government is going to continue to do, what new creative idea they're going to come up with the tax code. Has anybody wondered whether a lot of the loss of those businesses over the last 8 or so years, or 6 to 8 years, might have been because businesses invested in some of those write-offs that they had early opportunities to do, and the change in our economy had us deeply in debt as businesses because nobody predicted this collapse, but that because of the tax codes actually caused people to do things that might otherwise been more prudent to go some other direction. Anybody care to touch on that one?
It caused us to be more conservative than I think we would have been. We are risk takers. That's the pure heart of an entrepreneur. However, if you jump in the water and then you don't make the necessary changes, I'm still in the water. So I think that it has created a situation where entrepreneurs have taken less risks. Honestly, in my opinion, I believe that means we've hired fewer people as an aggregate.
Well, along with my comment on that is, I guess back in 2004, 5, 6, 7, 8, things were moving along. You got major tax deductions, trying to get the economy moving again prior to that. You got major tax deductions on equipment in the construction industry, mining industry, and other industries that you wanted to utilize that opportunity when you're spending millions of dollars in taxes and providing that opportunity. And then the collapse came, which you still owe that debt, but you can't even make the tax, so now you turn a different direction. So do you believe there's any cause, because there was uncertainty in taxes, the direction they went, and how they changed in that short of time?
Earlier you mentioned that a lot of people didn't see it coming. The government didn't see it coming. We did not see it coming. And 2009 was the first time in our career we ever had to lay anyone off. If I fire you, that's different. It doesn't matter. You earned the right to be fired. But if we lay you off because we missed something, It was the most horrible situation our family ever went through because those team members to us, that's gold. That's our number one
That's
asset.
the toughest thing you'll ever do.
It was horrible.
Thank you. My time's expired.
Thank you. Gentleman yields back. The gentleman from South Carolina, Mr. Rice, who is chairman of the Subcommittee on Economic Growth, Tax, and Capital Access, is recognized for 5 minutes.
Thank you. I want to start with Mr. Lips and Mr. McGregor because y'all are in business. Are either, Mr. Lips, is your business exposed to international competition?
We're really not. The mattress industry is semi-insulated. If you look at the cubic foot, the size of a mattress product coming from a foreign country, it takes up so much room in a cargo container that because of not necessarily weight, but because of cubic feet, we are a little more insulated than many of our small business brethren.
Mr. McGregor?
We do a fair amount of business with Husqvarna in South Carolina, and they buy pulleys from us. And it's been some years we get it and other years we don't, but China is our competitor there. And we're scheduled to lose that business. We haven't lost it yet, maybe because of the dock strike, I'm not sure, but yes.
Do you think that our tax code makes you more or less competitive with your competition in China?
Well, I've spent some time in China, and I know their cost. I think that the tax code is definitely a factor in our pricing. I'm not sure it's enough to make a difference.
Basically, I look at taxes, the price you pay to keep the government open, and if you're paying more for your government than they're paying for their government, doesn't that put you at a competitive disadvantage?
Their government's putting them in business.
Mr. Sepp and Mr. Toder, Mr. Toder, would you define a loophole for me? I keep hearing people throw around the term loophole like every deduction is a loophole. What is a loophole?
I don't call those provisions loopholes. I call them tax subsidies, benefits, tax expenditures. To me, a loophole is something that's enacted in the dark of night by somebody that only a few people benefit from, that most people don't know about, and they're sneaky things. But that's why I don't use the word loophole. I prefer to say a tax preference, which means something which gives your form of income or your form of activity more favorable treatment than somebody else.
Wouldn't you say that most of these things in the tax code are intended to promote certain activity and were enacted with well-intentioned ideas?
Absolutely. That doesn't mean they're good policy, but absolutely.
Mr. Sepp, would you agree with that?
Yeah,
What's a loophole in your mind?
That's an impossible definition, because a loophole is, to one person, is a subsidy or a tax relief provision to another. I would say, though, that some things that qualify for a tax provision being less desirable than more desirable is it's very narrowly drawn, it's temporary in nature, it has clawbacks built into it that might specifically exclude some industries from availing themselves of it. So those are things to look for in formulating better tax policy.
Is the mortgage interest deduction a loophole?
For a write-off for housing, that is a social goal that Congress has settled on as something that's desirable for many people. I don't think it necessarily has to be in the tax code if it's properly constructed.
Is the capital gains rate a loophole?
No, because capital gains taxation is a form of double taxation in many cases.
I have a question for you. Do you think, would you characterize our tax code for us, is it internationally competitive or non-competitive?
Non-competitive in a number of ways. We've talked a little bit about
I'm running out of time, so I have to cut you off. Mr. Toder, competitive or non-competitive?
I think our system places some of our companies at a disadvantage, but it places some of our companies at an advantage. It's really a case-by-case situation.
I want to follow up with that on that with you a little later. I'm just running out of time. Would you characterize our tax code, Mr. Toder, as modern or outdated?
I think it's outdated.
Mr. Sepp?
Outdated.
Would you say, Mr. Sepp, that our tax code promotes or stifles economic growth in this country?
Stifles it.
Mr. Toder?
I don't think it stifles it. I think we could have a tax code which is more friendly to economic growth, but I don't think it's a major factor.
I think we can do a lot better. I think it actually stifles economic activity. And I want to end my little presentation by apologizing to all of you gentlemen that we don't have leadership on both sides of the aisle here that are willing to put forth bold ideas about tax reform. So I think we could do a lot better for this country, and we could do a lot better to promote economic activity. Thank you very much.
Thank you. The gentleman's time has expired. The gentleman from Virginia, Mr. Brad, is recognized for 5 minutes.
Thank you, Mr. Chairman. I thank you all for coming before us today. Pleasure to have you with us. I've been listening, and several themes are emerging. I want you to put on your marketing hats right now. I recently ran for federal office, knocked 1,000 doors or whatever. My district is all small business, and you go door to door to door, and small business says, no one listens to us. Right? I got cattlemen, ranchers, farmers, a bunch of small business, community bankers are by far and away the majority of folks, and some of them are almost conspiracy-minded in terms of the system is rigged against them. And so at the end of this, I'll just give a couple ideas and just put a few of the phrases I've been hearing forward. But at the end of this, I just like, if you have 30 seconds of messaging, right, on behalf of small business person across the country, what would your messaging be to Congress? And a lot of the folks, kind of, Mr. Lips has been saying it over and over and over, most of small businesses are too busy doing their own thing to spend significant time thinking about messaging when it does matter in terms of getting the right policy. And you kind of got to get the current moving in the right direction so us politicians can jump in later and help you. But the current's got to be moving, and it's not moving. And so I always ask my small business people, hey, start writing in the local papers, right? Start writing, just not political hit pieces, but just, hey, with this tax rate, with this regulation, I can't stay in business. I'm going to go out of business. My people are going to lose their jobs, just so you know, right? So I mean, I just want to get you thinking that way in terms of, I'll come back. We've been mentioning depreciation, expensing, tax rates. You know, what's the message? What should we be hitting on there? I've got a tax foundation published a piece on economic and budgetary effects of full expensing of investment. Mr. Sepp was getting at that. It sounded like that was if you could hit that, that was pay dirt. Found cutting corporate tax rate 10 points would increase GDP about 2%. But full expensing would boost GDP about 5%. I'm just kind of asking. Total federal tax revenue would be $97 billion a year. Also, benefits accrued disproportionately to the low end of the income scale due to job growth, productivity, wages. I'm just kind of throwing those kind of three out: tax rates, depreciation, expensing, regulatory burden, just as a setup. 30 seconds to everybody. Why don't we start with Mr. Lips? If you had to message to the country, you're going on TV, what would you say? What's for small business?
I would start by agreeing with your initial comments that many small businesses have thrown their hands up and said their voice isn't being heard. Earlier in our testimony, you heard someone say that there's not an outcry, an upswell from small business community. We are working. That's why you don't hear that. But a lot of them will tell you they have no say. So why are they going to invest that time when they could have been building one more mattress? So that's my first point. My second point is I don't hear small businesses saying find us loopholes or advantages. I find them saying make it easy enough that I can understand it and I'll pay my taxes and I'll go back to work and create a job. So I don't think we're looking for advantages. I think we're looking for less complexity.
Good. Thank you. Mr. Sepp.
My message would be get more involved in the tools that are available and use them to your advantage. Volunteer for the taxpayer advocacy panels. That is where tax complexity is addressed at the most basic level. Also, have more committees outside of Ways and Means Committee get involved in tax complexity analysis. There was a requirement in the 1998 law that we have an analysis of complexity accompanying every major tax provision coming out of Ways and Means or Finance. We haven't adhered to that rule. We've got to have more coordination between those panels and the IRS's taxpayer advocate to get these suggestions into the policy-making stream so that businesses do feel their concerns are being taken seriously.
Right. Mr. McGregor?
I would echo simplicity, permanence, rates designed for growth and acknowledged by everyone that that's the intent. As far as expensive, I see that as more of a deferral, so I'm not as excited about that.
Mr. Toder, sorry, 19 seconds.
Okay. I agree with my fellow panelists on simplicity. I think everyone should be paying taxes commensurate with their income, but we should make it easy for them to do that, and we should have lower rates rather than special benefits.
All right, thank you all for being with us. Thank you.
Thank you. The gentleman yields back. I'd like to thank our distinguished panel here, both this morning and this afternoon, because we're afternoon now. I think you all did an excellent job, and I think I think some of the stuff we already inherently knew, but you said it so well that it's going to stick. And I think one of the things you said is how significant it is that we not only reform our corporate tax code, but also the individual. It has to go hand in hand. We need to simplify it. There was consensus on a lot of things here, and we intend on this committee to work with Paul Ryan and the Ways and Means Committee as we move forward on any reform package. And I want to thank the ranking member and minority members of the committee also for participating today. And I'd ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. And if there's no further business to come before the committee, we're adjourned. Thank you very much.